Hi, business owner, come close. Today we are going to be discussing 10 costly mistakes you business owner operating in Nigeria make that attract huge penalties. Are you a business owner operating in Nigeria? This is the time where you are going to take your time, sit down and listen to this in order to avoid any high penalties from FIRS, CAC, as well as other regulatory bodies in Nigeria. So if you are just watching us for the first time, click on the subscribe button, like, and then turn on your notification so that you are going to be receiving powerful financial and tax insights from this channel when we get to drop them. So we are going to be proceeding to look at the 10 costly mistakes you business owners make that cost you huge penalties in Nigeria. So the first point we are going to be looking at is operating your business without registering for tax. There are a lot of business owners on this table in Nigeria. Most of the time when you get to register your business with the CAC, you feel relaxed that, oh, that's the end of things, but that is just the beginning. After registering your business with CAC, you are expected to register your business with the tax authority. For a limited liability company, you are expected to register your business with FIRS closest to your registered business address. And then for a business name, you are supposed to register and obtain a tax identification number that you registered your business. So most business owners tend not to do this, and at the end of the day, they start operating and continue operating until the day the tax authorities come for them. And then you know what happens: huge penalties count from the inception of operation down to the time that they come for you. You are going to be paying huge penalties for not filing, penalties based on the tax you're supposed to pay that you didn't pay, and interest on the commercial rate. And you all know interest now is going very high in Nigeria. The second point we are going to be looking at is you using the registered date on your CAC certificate as your business commencement date. Most of the time, business owners approach the Federal Inland Revenue Service to register their business for tax. But then these particular basic mistakes keep reoccurring and ends up giving them huge penalties. Look, the registration date on your CAC certificate is not your business commencement date. Your business commencement date is when you begin operation in your business. So anytime you include your CAC registration date on your certificate as your business commencement date, know that your taxes will start accruing from that day you put on your registration with the FIRS that your business has commenced. So most of the time, I advise you to use the date you commence transaction in the corporate bank statement you secured after you have registered your business. So this particular thing has been recurring, and man, this has been a big issue. Many companies get to incur these penalties unsuspectingly without knowing, and I don't want that for you. Let's look at the third point. The third point we are going to be looking at, which is also a more commonly and major massive point that many business owners are on the table shaking, is mixing your business and your finance with your personal fund. Many business owners get to mix their personal fund and then their business fund. And what happens? By the time your business and personal fund are mixed together, the tax authority are going to assess you based on your total turnover. You know, based on the Nigerian Tax Act, there is a small company, there is a medium company, and there is a large company. Medium and large company have been decided by the turnover, whatever comes into the business as income. So let's take a case where you are a small company. Currently, a small company is a company that earns not more than 25 million annually. Then a medium company is a company that earns between 25 to 100 million, and a large company is a company that earns between 100 million above. But then the new tax act that is taking effect from the 1st of January 2026 mentions a small company as a company that earns between 0 to 50 million, and then with a net asset of 250 million, and then a large company from 50 million above. So let's take, for instance, you mix your personal finance and your business finance in your corporate bank statement, and then you get to receive money in your corporate bank statement for your personal dealings. So what happens? Your company's turnover keeps increasing, and that may position you as a large company, and then your profit will be taxed at 30%, whereby if as a small company you are supposed to pay 0% tax, you are just meant to file. So this is a particular issue most business owners also face, and then this is why I'm communicating this to you so that you take the appropriate action. The fourth point we are going to be discussing right now is how this particular point has been a major issue, and then people end up paying penalties. Okay, this point now is not filing your annual returns with the Corporate Affairs Commission. Someone may want to ask, what is annual returns? Annual returns with the CAC is basically you paying the CAC annually to maintain your company name on their register. So most people end up not paying CAC annual returns because, of course, most people don't even have an idea that they are supposed to pay annual returns with the CAC. But this is it. Once you have registered or incorporated your business with the CAC, it is already an obligation for you to pay your annual returns annually, and failure to do this, you are going to pay additional penalties for not filing. So most business owners don't know this, but then I'm communicating this to you now. Annual returns is an obligation that you need to fulfill annually with the Corporate Affairs Commission once your business is registered, so that the CAC get to maintain your name on their register. So the fifth point we are going to be looking at right now is you ignoring to charge VAT on transactions. A lot of business owners claim that, oh, we are small, if we charge VAT for this client run away. We understand that if you charge VAT on those clients, the client run away. But then, as a business operating in Nigeria, you are automatically a collection agent on behalf of the tax authority. So by the time you fail to receive, and by the time you fail to charge and file the VAT on behalf of the tax authority, of course, are going to fine you. You are going to pay penalties for not charging and remitting. So the next time you are trying to say, oh, we are a small business, we are not supposed to charge this business, we are not supposed to charge for VAT, our clients will run away, keep it in mind that the tax authority will come for you and you are going to pay penalties for not charging and filing. Sixth point is ignoring withholding tax deduction and remittance. Most business owners are on this table. It's either you fail to withhold tax and file to the tax authority, or when a client withholds tax from you, the client fails to charge it or file it on your behalf. This is a common practice in Nigeria, and then pay attention to this. When you are to do a transaction with someone and you are paying the person for offering you service, you are supposed to withhold a certain amount. Withholding tax in Nigeria varies by rate. There is 2.5%, there is 2%, there is 5%, there is 10%. But let's take, for instance, a case of rent. If you are paying the rent, you are supposed to withhold 10% and file to the tax authority on behalf of your landlord. But then, most business owners tend not to do this, and at the end of the day, we tend to pay this money from our own personal finance by the time the tax authority comes for us. The second part of it is people that you offer services tend to withhold tax from your payment and fail to file. Look, withholding tax is a credit for company income tax. If, for instance, at the end of the year you are supposed to pay a tax of 1 million, and then the withholding tax they have been withholding for you, they file it on your behalf and sums up to 500,000. What happens is the 500,000 will be deducted from the 1 million you are supposed to pay, and you pay the balance of 500,000 naira. So that's how withholding tax works. So the next time someone deducts withholding tax from you and fail to file, follow up for it to be filed. And the next time you are having a transaction with someone, you have to check and test that transaction whether it's withholding tax deductible. And if it's withholding tax deductible and you fail to deduct, you will pay penalties for not deducting and filing as appropriate. So the seventh point we are going to be discussing is opening multiple bank accounts and trying to hide some from the tax authority. Business owners, most business owners, and some of them also open multiple bank accounts, run business with all the bank accounts, and try to hide some of the bank accounts from the tax authority. Look, if you try to do this, the tax authority have a system that they can be able to extract the bank statement or bank records that has to do with any company in Nigeria. I had a situation where our client had up to 12 bank statements running business and had tried to hide 6 of them. So it became an issue of a tax audit, and the tax authority were able to extract the files of all the bank statements from inception of registering with the bank down to the time the audit was conducted. And what happened? The clients had to pay multiple huge penalties for not filing and trying to also hide those bank statements from the tax authority. So let's look at the 8th point. Business owners do this particular thing. They tend to use their corporate bank account to receive money on behalf of their clients or on behalf of their friends and family for transactions that do not relate to their business. But this is what happens. Like I said earlier in this video, as a company operating in Nigeria, there are grades of company. There's a small company, a medium company, and a large company. And these companies are graded by turnover. So let's look at this. You may be a small company based on your company's transaction, but because you receive money on behalf of someone, your transactions and turnover for that year may shoot up to 100 million, and you will be meant to pay 30% tax on your profit. Let's take for instance you are a small company. As a small company, currently you are supposed to earn between 0 to 25 million turnover. As a medium company, between 25 to 50 million, and as a large company, between 100 million above. But the new Nigerian Tax Act that will take effect from 1st January 2026 says that a small company is a company from 0 to 50 million. So let's assume your whole transaction for the year are just about 45 million, and then a friend of yours calls you that he needs your bank account to receive a transaction that do not even relate to your business, and the transaction is about 55 million. So by that already, by the time you accept that transaction, your company has already qualified as a large company, and then you will be taxed at 30% instead of you being taxed at 0% based on the new tax law. Look at the 9th point, and this one is it's actually very crazy, and these business owners don't even know that this is not possible. Most business owners try to register another team for their company after they have run business for some time in order to evade taxes. Look, you end up getting yourself into serious mess and huge penalties if you try to evade tax by going to register another thing for your company. This is actually not possible, and by the time you try, you will land yourself into serious problem. So if you have ever thought of going to register another tax identification number for your company after running business with a particular thing for a long time, then you really need to abort mission right now, because this is going to put you into legal problem, because this is a move of tax evasion, and tax evasion is a crime in Nigeria. And then the last point, as a business owner in Nigeria, once you are operating in Nigeria, you need the services of a professional tax consultant, and that's where we come in. At Cruisewise Consulting, we provide you excellent tax service to ensure that you pay the minimum taxes possible. Our client will go above and beyond for our client to ensure that we walk you through the process, and also we intercede on your behalf and represent you in tax matters to be able to ensure that you pay the minimum taxes possible. So if this is what you want for your business, you don't want to have a lot of tax challenges and then you want to focus on growing your business while we handle your taxes, reach out to us on the number displaying on your screen. Let's help you sort out your taxes. These are 10 valid strong points you need to know as a business owner operating in Nigeria. See you in the next video.